Welcome to Illuminati Silver. We tell you the truth about silver. Today is Thursday, the 23rd of September 2021, and we're analysing what the FOMC meeting's decision yesterday and subsequent comments mean for gold and silver prices moving forward. So let's take a look. Yes, indeed, we had the long-awaited announcement yesterday, after which Federal Reserve Chair Jerome Powell said the US Central Bank could begin scaling back asset purchases in November and complete the process by mid-2022. He told reporters that tapering, quote, could come as soon as the next meeting, unquote. Now, the next meeting is due on the 2nd and 3rd of November, with the announcement due on the 3rd. Jerome Powell's remarks left him the option, though, to delay even longer and beyond this date, if necessary, by linking it to the performance of the economy, which is why the next Nonfarm Payroll Report due on the 8th of October, as well as then the retail sales figures due out shortly afterwards, will be so important yet again, because the following non-farm payroll report will actually come out after the Fed meeting in November. Now, Powell was at pains to emphasize that, quote, the timing and pace of the coming reduction in asset purchases will not be intended to carry a direct signal regarding the timing of interest rate liftoff, unquote, and that he didn't really expect the Fed to begin rate increases until after completing the tapering process, which could wrap up, quote, sometime around the middle of next year, unquote. Now, to some, this has calmed concerns, but to others it has raised them, because it does actually bring into account the prospect of interest rates rising in 2022. Whereas most analysts were predicting and forecasting no rate rise until 2023. Now, according to Bloomberg reporting, quote, in addition to signaling a scale back in upcoming bond buying, officials also published updated quarterly projections, which showed officials are now evenly split on whether or not it will be appropriate to begin raising the federal funds rate as soon as next year, according to the median estimate of FOMC participants. In June, the median projection indicated no rate increases until 2023. The projections are not a policy commitment and reflect the personal views of policy makers, some of whom may no longer be serving at the Fed next year, unquote. And yes, Joe Biden, the President of the United States, has to make the decision whether he's going to renew Jerome Powell's position or whether he's going to replace him. At the moment, Powell does seem a little bit dovish compared to some of the other governors who we anticipate will be replaced. Now, Diane Swonk, the chief economist at Grant Thornton LLP, told Bloomberg, quote, the chairman is a dove among hawks. He would like to divorce tapering from liftoff and stress the threshold for rate hikes is much higher than that for tapering, unquote. Which could suggest, if this is acknowledged in the White House, that perhaps Jerome Powell's tenure will be renewed. Now, market reaction to the news was essentially muted, where although the dollar index strengthened slightly around the news, and thus we saw a modestly sharp rise in gold and silver prices, sharp in terms of the speed that they rose, the index eventually fell a little, and we saw long-end interest rates fall, thereby flattening the yield curve. Now, this video is being published at 6 p.m. GMT +1, but the time of writing this is still some 5.5 hours earlier, which is 12:30. And we can see that gold is currently standing at $1,773, some $18 higher than last Friday's close, and silver is standing at $22.73, some 32 cents higher than last Friday's close. Now, there is additional economic data being published today. including the weekly jobless claims plus the market manufacturing and services flash PMIs, which could indeed have an impact on the dollar and prices for gold and silver. But we suspect they will be limited unless, of course, the figures are completely way off expectations. Now, there is no doubt that Jerome Powell has given the Fed some breathing room, and it looks as if he has pulled off the trick of not alarming markets, at least for now. Futures markets are up 0.5% on average for US equities. However, that is modest in view of their recent falls, though the markets did rise yesterday. Now, whilst gold and silver has benefited slightly, it's still difficult for us to see a path to much higher prices right now, as COVID-19 and its Delta variant is still rampaging throughout many parts of the world, with greater levels of infections and growing hospitalizations continuing. The Evergrande situation also cannot be totally discounted or ignored, and for those who think that a stock market fall will lead to immediately higher gold and silver prices, should really reflect and look back to what happened in 2008, because precious metal prices also fell at the same time and took a little while to recover and then reach all-time highs, but that was some 2 to 3 years later. Now, markets are going to use the prospects of tapering and then higher rates as a rationale to sell gold, and the failure of the global economy to expand at the levels they were hoping to adversely affect the price of silver, due to industrial demand either falling off or not rising as quickly as expectations demanded. One additional fillip, though, for precious metals could be if Biden can finally pass his $3 trillion stimulus infrastructure bill, but this too, if passed, will only be short-lived in terms of positive tailwinds for precious metal prices. Now, we should frankly have expected to see larger rises in precious metal prices following the announcement, and the fact that we haven't either suggests that the market has not fully factored in this delay in tapering, albeit only 6 weeks or so, or alternatively have already done so in the price, and if so, that does not bode well moving forward. Whilst we can see beneath the surface that the Fed is being slightly dovish by giving itself plenty of options, at least very short term, in a couple of months the whole situation is likely to change. Now, this is what Reuters reported. Quote, "Investors are grappling with how an unwind of the Federal Reserve's easy money policies could affect asset prices after the central bank signaled that a taper of its bond buying program was closer than ever, and suggested it may raise rates at a faster than expected pace. In what some described as a hawkish tilt, the Federal Reserve on Wednesday cleared the way to begin reducing its monthly bond purchases as soon as November, and 9 of 18 US central bank policymakers projected borrowing costs will need to rise in 2022, unquote. Now, Emily Rowland, the co-chief investment strategist at John Hancock Investment Management, told Reuters, quote, "With this hawkish move, the Fed risks tightening policy into a slow growth backdrop." Now, the Fed will be acutely aware of what the market reaction was when it started to reverse its QE program a number of years ago, and we saw a massive decline in the equity markets, which, whilst we all accept they are somewhat in a bubble, they will do their utmost to prevent happening. Maybe allow a slow, gradual decline in order to perhaps take the steam out of those markets, but they don't wish the bubble to absolutely pop. So, what's our view moving forward? Well, quite frankly, the market still has to fully digest the implications of this news, and they will be looking at economic data being published by the United States in particular, but also looking at Europe and China and some other nations such as India. That said, we have the Bank of England about to announce its decision on interest rates, which will potentially have an impact vis-a-vis the price of sterling versus the dollar. And we also are aware that Europe is also looking potentially at some form of tapering of its bond buying program. The UK probably has to, because we have very high levels of inflation currently. The dilemma, though, and this is where there is a disparity with the United States, retail sales in the UK have been extremely poor, whereas in the United States they've been very buoyant, at least to date. So wrapping this video up, in essence, we're not confident that gold and silver are going to advance that much further. Certainly not in the short term. There will be worries about the tapering coming in November, and this will overhang the market. Now, will we get a few dollar rises? Potentially we might in terms of gold, and maybe a few cents rises in terms of silver short term. But let's not kid ourselves. The prospect of higher rates, and certainly if the US dollar can maintain its level above 93, and goodness forbid actually advances further, then that will not augur well for precious metal prices. We haven't sold any gold and silver from our own stock. We do not intend to, because we have purchased it long term, because we're still believers in both those precious metals. But what may happen is we could have lower prices ahead, which would be ideal for those looking to get into the market or those wishing to top up on the reserves that they already possess. What are your thoughts? Do you think gold and silver are going to shoot to the moon now on the back of what's happened? Or do you think, like us, there might be a little bit of a pullback coming shortly? Do share your thoughts. Give us a thumbs up if you like the video. Give us a thumbs down if you don't. Subscribe. Press the bell sign. Until tomorrow. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice, and merely represent the personal views of its owners.